And it's absolutely amazing, right? I mean, yesterday we did not relent. Foreign institutional investors were net buyers. What has done the trick for India? Crude is down, FIs are back, earnings are okay, dollar is under control, rupee is strengthening, China is not on the negotiating table so far with US, and US has gone on record and has indicated that India could be one of the first ones where the trade deal would be. It may not be the first one, but one amongst the first, or one amongst the few initial names where the trade deal would be signed. So US FTA, one deal is done. Crude moves in our favor. Geopolitical updates, the entire sort of concern now in terms of level of escalation, that seems to be getting sorted. And then we are missing on the FI flows here. I think that is also the real hurrah point for the market in terms of what has changed. Hemang Jani, all the concerns which existed or coexisted couple of weeks ago, they are getting addressed. Where will markets go now? Markets have climbed the wall of worry. Will they continue to ride the ray of hope now?
Morning, Nikunj. I think the market by and large has remained resilient, despite such a big, geopolitical risk. And the fact that even before, the strike happened, particularly the Nifty movement was quite, stable, and we saw a lot of resilience. The broader market had its own sort of, corrective phase. But I do think that, given the fact that this event has happened, and though it's an evolving situation, there is a possibility that you may see a bit of a cool off, and that may give a lot of comfort to investors. The fact that the earnings season is underway has not been that great, but we have to be mindful of the fact that the expectations also were low. The derivative position is on a lighter side because of the event risk. So overall, I don't see a reason for the market to correct in a big way. I do think that this is the time where you just have to wait out for a good opportunity whenever you see small correction in the stocks, which have corrected a lot, and where you have a slightly better understanding of the business and the earnings are okay. I think slowly buying those names could be a good strategy to have. I don't think the market is in a mood to sort of give a deeper correction unless you have a really, surprise move on the geopolitical front.
Okay. Kunal, Reliance did the trick for us last week. The leadership now seems to be moving away from banks. What could join the party next?
Difficult to say, Nikunj, because we are not seeing that sector patterns right now as strong, what we've seen for banks. For example, NBFCs also, I think you've seen Bajaj Finance, Shriram Finance, Chola Finance, many of these stocks have taken a bit of a corrective phase, and these stocks have come back into their midpoints of their previous 1 month of price rally. You've also seen metal stocks going into a correction. There's some signs that maybe the PSU stocks, the defense names, are leading the charge from the front. But after yesterday's price correction for many of these stocks, we may probably anticipate that these sectors may also go into a correction. So that's the reason why you're seeing the index also being a lot more range bound, because you don't have any major sectors which are making a comeback. FMCG is the one which has been consolidating. Pharma stocks, largely Sun Pharma, Cipla, Lupin, etc. These stocks are also into a range. So very difficult to say it right now, Nikunj.
Well, the one stock that has definitely been holding up, and this I think after the shareholders' approval of the CV business spin-off plan, which happened day before, or for that matter, that fillip that it's getting even perhaps from the UK FTA signing, is Tata Motors. Kunal, firstly on the charts, because you were alerting, I think, 10 days back, the Tata Motors is now severely underperformed as opposed to peers like M&M, etc., and it's poised now for a breakout.
Yeah, so I think we flagged off at a point when the stock was up 600, 560, 70 thereabouts. I would still believe that the stock looks extremely attractive. And the best part about the stock yesterday, for the first time, the volumes over the last 1 month had started to improve significantly for Tata Motors. The stock crossing, showing strong bullish candlestick formations. I strongly believe that the stock should rally further from current levels also. And we've seen historically that whenever the stock falls 20% at least below its long-term moving averages, there is an initial wave of retracement towards the 200-day moving average first. the stock settles at that kind of a price band, and then gradually the next trend restarts for Tata Motors. So that level is closer to 750, 770 mark for Tata Motors. So expecting another 10% to 15% up move with the stock over the next 1 to 3 months.
It's kind of the gains and gainers and losers. A lot of FTA dominated stocks were in action yesterday. What is FTA? Well, FTA means that there would be some preferential rates which essentially preferred trading partner. You would like to call them that way. And in that, there are large changes. They would be applicable as time moves on, but markets would start reacting ahead. So the FTA impact for Indian companies which would benefit, of course, would be textiles. Not too many listed companies are there in the textile space, but the ones which come right above that, no, Vardhaman's not going to gain, guys. Raymond does not export. Welspun Enterprises is not going to gain. It's going to be Welspun Lifestyle. Please change it. Welspun Enterprises is not the one which will gain. The one which will gain would be Gokul Das, Kitex Garments, Welspun Living. They are into home textiles. Indocount. I mean, I'm not so sure what are the total exports to UK, but Kitex I know does exports to, they have presence in UK. I certainly know that Gokuldas has a huge advantage because of this entire FTA. So this is the one which actually could be Kitex. Let's look at it, please. And Welspun Living, that's the other one which actually could see, price action. Kitex thought as much actually. Yeah. Sometimes it's easy, right, Kunal? Just make it sound difficult. Yeah. Welspun Living, this is the one, not Welspun Enterprises. Yeah, because this is the one which is in bed sheets. I mean, this is the company which is run actually by Mrs.
The newly
Goenka.
spun off.
No, I mean, this is the one which is run by Mrs. Goenka. It's been existed. I'm not sure if it's spun off because I've tracked it for years actually. Or maybe the muscle memory is fading. Okay. Anything interesting on the FDA front, Hemang, which looks good to you?
Because I think, some of the spirit companies, particularly United Spirits, I think should be well placed. I think the current duty structure is not that favorable to import, the marquee brands that they have globally. So I definitely think that there will be a certain amount of zinc that will come into that stock because of the way the deal has been signed. And I do think that overall, even without the treaty, the business was quite stable. You had about 7, 8, 9% kind of volume growth, stable margin. So if we have any incremental positives because of the treaty being signed, surely that would be one space to look out for. I think textile. Yesterday we had seen a broad-based rally, but as you rightly pointed out, some of the companies that are actually exporting, to UK or some other markets, because it's not just the UK treaty, but you may have a treaty being signed with US, and depending upon how things unfold, you might see some action. So I think KPR Mills and some of the textile companies, Himmat Singka, Gokul Das, we had exceptionally high volumes yesterday. So I do think that some of these companies would stand to benefit because the size of the opportunity for textile, would be very, very large. So I think Gokul Das, KPR Mill, ICIL, Welspun Living, these are some of the names that I would surely look out for in terms of, playing this treaty event.
Right, okay, that's that on the textile universe. And we were just looking at the list of the other sensitives. And of course, it's actually the Alcobev segment which perhaps stands to be most sensitive to the UK FTA signing. And we will bring up those expert bites as well, wherein, we were trying to analyze as to how much could not just be the MRP impact, but more importantly, what sort of volume as well as a margin repercussion as well. This particular import duty on Scotch whisky almost getting halved has. But Hemang, hi, morning. What is your own assessment on how one should look at the likes of United Spirits or a Radico now?
Naisha, overall, the space has been quite stable. It's one of the few pockets which has remained resilient right through this, last 6 to 8 months, where the market itself was going through a bit of a corrective phase, or we had a long grind. So I think fundamentally, something like United Spirits, even United Breweries that reported the numbers, I think on the volume and the margin front, there was a bit of a positive surprise. Also, the fact that you have some of the state policies in terms of the levies, there is a bit of a favorable development for the spirit companies. So I do think that United Spirits, United Breweries are the ones that would be in a much better position, because you will see incremental volume growth and high margin products could get imported, and that would surely, give you a positive surprise in terms of earnings.
Have your take on Titan, because this stock, I believe that this stock reacted already when we have the Q4 updates coming in from this particular counter. But given the earnings season, what's your expectation from Titan, and how do you see the stock moving? Because the stock has been a little volatile in the recent while, and in the past couple of weeks, it's just correcting.
I think despite steady performances, from Titan for last, 2 or 3 quarters, somehow the stock has actually underperformed the market, as well as, some of the smaller players did much better, something like a Kalyan and Senko and all for a point of time. So I do think that, purely from a earnings perspective and the way the company is positioned being a large cap marquee player, the valuations look good given the growth potential. But I think what is, happening is that the gold prices continue to remain much at an elevated level. And that would surely be a factor that investors would have in mind in terms of the growth that the company can deliver. Also, I think this lab grown diamond part, there is a certain amount of impact, though people are not talking about it much. But I do feel that there is going to be some disruption for, the jewelry players who have a larger component of the, diamond business in the overall scheme of things. So I do think that, if Titan continues to grow at 16-18% with 10-11% kind of a margin, I definitely think that it would be a good allocation stock to have in the portfolio.
Been a market performer, but it is one of those, dividend stocks, if you will, and if I can describe it that way. What is your own sense on how Coal India should be looked at?
In the current scenario, you may see a little bit of a pop, when the market gives you a bit of a stability. But purely from a earnings, from a fundamental perspective, except for the fact that the stock is cheap, which it has been, for a long period of time, and the fact that it offers a certain dividend yield, I don't see any catalysts or triggers for it to really do exceptionally well. So I would certainly stay away from the stock from a pure portfolio holding point of view. But yes, from a tactical, positional point of view, it might offer you a 3-5% kind of a move. I don't think in the current scenario, people are looking out for these kind of stories.
Yeah, in Coal India. But Hemang, other than that, we also have the earnings from PNB, though the earnings did come during markets, but a majority of these brokerages have cut their target price. And this has been the case across, be it the case for BOB, SBI, the set was not that impressive. What's the outlook coming in on PSU banking names?
The overall outlook continues to be a bit subdued, though the stocks have really not done that well. And if you see the entire, last maybe 2 or 3 months where the bank Nifty itself did so well, the PSU stocks by and large have been laggards. So I do think that there is a preference for the companies which are performing well, be it ICICI Bank, Axis to some extent, HDFC Bank, or some of the other private sector banks. I definitely think that the best part of the re-rating or earnings-led revival for PSU banks is over. Unless you see a meaningful correction in names like State Bank of India, it would not be, advisable to sort of buy through this dips for the names like BOB or PNB, which anyway have not really delivered good set of numbers. So staying away from PSU pocket at this point.
Okay, stay away from PSUs. That's the word coming in from Hemang. But look at Dabur's performance as well. It's been a flat revenue growth for them. Both the EBITDA as well as the PAT have seen a downtick of about a good 8.5%. I was looking at Voltas. The Q4 numbers are below estimates from there. The losses from RAC exit market share as well have is something that they have incurred this time around. And then Tata Chemical too, wherein there is a significant margin pressure that they've seen in the quarter gone by. The margins have seen a downtick of nearly about 340 basis points. So that's the other stock which is going to react to its numbers. But Hemang, time and again you think that FMCG is going to finally come out of the woods and see a recovery. Doesn't seem to be the case looking at Dabur's performance for sure.
Yeah, absolutely, Aisha. It's been almost 2 or 3 quarters where we are seeing this kind of muted performance come through, and not only Dabur, but I think many other FMCG companies are not delivering the numbers in terms of volume growth, margin, etc. While they do talk about the rural side holding out well, and there is a potential revival, but on a broad basis, we are not seeing any meaningful uptick when it comes to the growth. Marico was a bit of an exception where you had a relatively better volume growth. So I do think that some of these companies will go through a range bound move because they have underperformed. So there may not be a big D-rating, but no real triggers to look forward to in many of these names.
All right, but Hemang, also give us your take on Tata Chemicals as well, because Aisha was just highlighting that the set was not that impressive. The margin seems to be under pressure, but in the commentary, the management is hopeful for some stabilization in global demand and India too. Do you believe that maybe in the near term, this stock can also give an opportunity to maybe buy on dips?
I think we should watch out for the commodity or the underlying price movement because a large part of their business is coming from soda ash and certain specific commodities. So unless we see some sort of a stability or some visibility on the price movement of that underlying commodity, it would be difficult to gauge how the stock is going to perform. So let's watch out for some more, data points and let the stock correct. Maybe a 5-7% correction may provide a good entry point.
Hasn't been the best of quarters, and I'm, only sort of understating that. But do you think that all the concerns around the US economy because of the repercussions of tariffs could perhaps be easing other than China? It seems like, there's going to be some resolution or the other with many countries with regards to tariff. You think IT could perhaps be looked at right now?
Aisha, we will have to take a company specific call. Some of the companies were sounding quite positive. The numbers were good, like, case in point being Coforge and some of the mid cap IT companies. But on an overall basis, I do think that given the way the things are panning out on the AI front, and one of the large IT companies, I did hear them say that almost 20% of the code is being written by the AI and machine learning, etc. So I think this entire sector is going through a bit of a difficult phase. So we will have to watch out for the companies which are delivering at this point of time in a challenging environment where the management outlook is better. So Coforge is something that I would be surely positive on. Maybe LTI Mindtree would be one stock that I would be watching out for. But some of the large cap names, Infosys, TCS, they are going through a bit of a difficult patch where you don't see any meaningful dollar revenue growth. Also, the fact that the rupee has appreciated, and if it remains around these levels, then the additional little bit of a margin related positive will also go away. So not too positive on the overall sector, but yes, stock specific, we can watch out for some opportunities.
All right, so not too positive, but let's